Well, thanks for joining me here today. Feel free, it's a small group tonight, so feel free to interrupt me at any time that you would like. Again, Ed and I, we've been kind of talking back and forth here for a little while now. It's something that we met through LinkedIn a while back, and we've had some follow up or previous phone calls where we spent a few hours on the call talking trading and our thoughts around trading, different approaches, what he's doing, what I'm doing. And I shared a lot around some of my personal endeavors and what I'm working on here with what you can see on the screen called Market Jungle. So really, agenda for today's call and what I've put together, I wanted to give everybody an introduction in my background in trading and some of my personal interests, just so that you can get a better feel for my background and where I'm coming from and how I'm applying that to my own personal trading. I'll share some more about my background with discretionary trading. I traded for a prop firm for a little while, and now I'm trading my own capital. And I have I've gone from a discretionary trader to an automated trader. I still do some discretionary trading here and there. It's not too often that I'm doing discretionary trading because my automated systems tend to beat me, and so it's kind of a competition around can I trade better than my system, or can my system trade better than I can? And I'll tell you, my system trades better than I can most of the time. So I'll give you guys a little bit of a background there on kind of my history there. I've been trading for 6 or 7 years now. It's been a whirlwind of a journey, and essentially my background in trading is what led me towards automated trading. And then after this, we'll talk a little bit about Market Jungle and what my vision is for Market Jungle, where we're at. And I'll give you guys a quick demo and share with you guys how I'm leveraging it in my own trading. This is something that I shared with Ed a while back as well. And he seemed to see a lot of value in it. And everybody I'm talking with sees a lot of value in it. So just trying to put it out there and see if it's something that will help everybody out with their own trading as well. So that's the agenda for tonight. We'll also do a Q&A session. Again, it's a pretty small room this evening, so if there's questions, feel free to just speak up and stop me where I'm at. We can certainly divert for a couple minutes and answer any questions that anybody has, and or we can wait towards the end. It's completely up to you guys. We'll try and keep it a little more intimate with such a small crowd here today. So again, I just wanted to start out with an introduction. So my name is Peter Callis III. That's why my initials on here at Discord are PK3. I have been in the heating and air conditioning industry my whole professional career. Started out in the field as an HVAC technician, and have really kind of just worked my way up in my professional career. Worked for a couple different manufacturers. You can see that here on the screen. I've been with Trane Carrier and currently with Daikin right now, managing all of the design and selection tools software for North America. So for my professional career now, it's mostly focused on software development and managing DevOps teams around the world. Previous roles were all technical problem solving and very hands-on. For my trading career, I traded for TradeNet Capital for a while. So this was the prop firm that I came on board with earlier on in my trading career. For me, this was more of a risk management tactic. I had some capital of my own that I was able to trade, but going to trade for a prop was a way that I could put up some risk capital, learn with some traders who were much more experienced than I was, and get the exposure of trading a large account. And at the time, it was large for me. I was trading an $80,000 account for them, which when you're just getting into trading, it seems like that's quite a bit of capital. But then as you start to grow your own accounts, it's really not a big account compared to other traders out there. But it was a way to kind of get that experience. What is it like not trading with the pattern day trading rule? And how are some of these other successful traders trading? And so for me, it was a way to protect my own personal capital because I could put up a little bit of risk capital and I could get funded. And I was around like-minded traders to be able to grow and learn as I went. After this, TradeNet actually came into some legal issues with the regulatory system. They got into some trouble with the SEC here in North America. I believe that was what their press release says. Don't quote me on that, but they ended up pulling all of their accounts out of North America. So at that time, my account got pulled along with every other trader across North America. And at this time, I don't think they're even in North America anymore. When I was trading for them, I was trading something called CFDs. and this was a contract for difference. It trades a little bit different than equities, and CFDs are a double-edged sword because there there is no issues with execution fills. They're instant. However, you're always paying the spread. You can never use limit orders with CFDs. For day trading, it makes a lot of sense because you can find stocks with tight spreads and you can place orders instantly, and you don't have to worry about delays and getting your order through the ECN to the market maker and getting a fill on it. So, for from a speed stance, it was great. Certainly have battled with speed on trading just regular equities when you start sizing up. But so that was kind of my background with trading for the prop. From that point, I moved into discretionary trading for myself. At this point, I was trading my own capital, and I was still probably 2, 3 years, maybe 4 years into it. And I had the fundamentals down. I understood my own trading plan, but man, was I struggling with psychology. So I thought the first mountain was learning technical analysis and understanding my plan and my strategy and so on and so forth. And once I finally made it through all of those hurdles and I thought I knew how to trade, I was hit with the next challenge, which was psychology. And it was a bigger challenge for me than learning how to actually trade, learning how, uh, uh, learning entries, exits, the spread, bid, ask, price, level two, the tape, so on and so forth. And so I was trading discretionary for myself for a while. Um, I would do really, really good for months on end. And then there's many times where I had a daily stop loss set and I wouldn't abide by it. And I would give back a month's worth of profits in a day or two. And so I was in this cycle. I knew better about it. And it was just so difficult for me to kind of break out of these psychological challenges. And because of that, I decided to shift more towards automated trading, mainly because I didn't have to, I could programmatically handle my risk without any emotion. And for me, that was a big plus to automated trading. Um, let's see here. So so after this point with the automated trading and going that route, I decided to open up a company called Market Jungle, and I'll share a little bit more about that with you today. Now, just some other kind of background about me, and just so you can see where I'm coming from. I'm a very creative individual. I build all sorts of different things, and so these are just some highlights of some things I've built throughout my life. The first one here is I was part of a Red Bull Blue Top team. I don't know if you've heard of that, but we ended up. I designed this aircraft here, which I don't know if you'd call it an aircraft or not, but it's something that I was on a team. We took fourth place in downtown Nashville. We pushed it off a barge, and it was a competition on how far we could fly the aircraft compared to the other people, the other teams. So that was a pretty significant accomplishment, and just wanted to kind of showcase the. I'm a builder. I build systems. I build all sorts of different things. But in the middle here, you can see I've built CNCs, 3D printers. I have a CNC mill here. I've built statues. And then on the far right, this is a prosthetic arm that I 3D printed and built for a maker fair that was held at Vanderbilt's Children's Hospital here in Nashville, Tennessee. So my whole background is troubleshooting from a professional stance, building things from a personal stance. Throughout the years, I've learned how to program between trying to write programs in G code for all of my equipment in the shop, or trying to write all of the C code to run all the prosthetic arms or the robot groups I'm a part of. So hopefully that just kind of gives you a little bit better background of where I'm coming from and what I'm bringing, or what skill sets I've kind of grown to develop over the years and I'm bringing to the market. All right, let's take a moment here to pause. Are there any questions so far? It looks like we've had a few other people join in this morning or this evening as well. All right, so Throughout my journey, um, there's been many psychological challenges. One of them was over trading. I guess we can start here. We'll talk a little bit about psychology. So, when I was dealing with over trading, I had found that it was another challenge. It was very difficult to break that habit loop. And one of the tactics that I leveraged and I tried to implement was I made myself some little chips that were 3D printed, and you could literally use a piece of paper, pencils, anything physical. And what I did was every morning before I sat down to trade, I would take three of them and I'll put them out in front of me, and I would say, these represent my trades. I'm only able to take three trades today. And what I was trying to do is I was trying to connect a physical object to trading so that I could kind of make that connection. And every single time I'd take a trade, I'd pull one away. And this is how I was grading myself every day on my over trading. I would take one away every single trade I took. If I went over and I traded anything other than three, it was something that it was considered a bad day for me. And that brings up a good point here. And we'll talk about trading plans here in a few minutes. But that was one of the psychological struggles that I dealt with. There's many others. I never really dealt with FOMO. The daily stop loss was something that I really struggled with. And again, that's one of the main reasons I shift over to automated trading. Let me open it up here one more time to everybody. What are some psychological challenges everybody's facing right now? I got as much time as everybody needs. We'll try and get through like the presentation part here at some point, and then once we get to actual like Q&As, I can stay as long as everybody needs. But look, yeah, and that's certainly. I actually made that mistake today. I was taking a discretionary trade in Nvidia. I posted it in the channel this afternoon, and I ended up scaling in a little bit too much, and this caused me to bring my stop loss up higher so that I was maintaining the same amount of risk, and it caused me to get out of the trade because I couldn't accept the amount of risk that I was putting on. So my original plan, I took a screenshot of it and I put it in the trading room this afternoon. And if I followed my original plan and I didn't continue to scale in with more risk, the trade would have worked out perfectly and I would have had a green day today. Unfortunately, I lost money today, but I made back most of my loss. It was a very small loss today. The reason I'm sharing this is one of the things with patience is I find that with my own patience, it's certainly tough, but the amount of money you're risking will help you or hurt you with your patience. And what I mean by this is if you're risking too much and you're uncomfortable, or when you put on a trade you're uncomfortable, it means that you're risking too much. You haven't flexed that muscle enough to become desensitized to putting that risk out there. So in my opinion, if you are feeling very excited, which is an emotion, or you're feeling very frustrated or upset, which is another emotion, most likely it's because you're trading with too much size. And when it comes to a trading plan, it's something that as part of the trading plan for each of you, you should have a written trading plan or playbook that talks about the different setups that you're going to be taking. What is your entry criteria? What is your exit criteria? How are you going to manage that trade once you're in it? But on top of all of this, you should also consider how are you going to scale the amount of risk that you're taking over time. And what I have found is like I previously mentioned, it's like a muscle that you flex over time, and the more you work it, the easier it becomes. If you're feeling uncomfortable, if you're not feeling patient enough, it may be due to the worry about losing money, and you have to completely detach yourself from it, unfortunately. And the easiest way to do it is starting with a smaller amount of money. Um, and once you're comfortable, it could be losing $1, it could be losing $10, it could be losing $100, whatever the case may be. And I've made a mistake myself here. Last year I was scaling and I was trying to come up with my plan to scale. And I was doing really, really, really good. I was up quite a bit for the year. And um, when it comes to you mentioned patience, and when it comes to scaling your risk and kind of flexing that muscle, it's really something that as you have the metrics that show you are performing well, you should be rewarding yourself with more, being able to take on more risk. And this doesn't mean risking $10 on every trade and now you can risk 20 and double your risk. That's one of the mistakes I made here this last year, where I was scaling my risk too fast. It wasn't giving me enough time to become comfortable with putting that amount of risk on every single trade. And it led to, I had 2 weeks where it was the worst 2 weeks I've ever had in my trading career last year. I still made out really well last year, but there was 2 weeks of time I gave back like $20,000 or $25,000 last year, over like a 2 week span. And it was because I was continuing to scale, and then I didn't scale slow enough, and I wasn't desensitized with the amount of size I was putting out there. So that's something that I've reconsidered in my own trading as well, as is my scaling plan. And I'm not sure if that answers your question, but hopefully that resonates with some of you. Yeah. Another thing that you can do to try and help with this, again, I would say in the beginning, it's not about making money. Forget about all these people who are saying, "Oh, make money quickly" and all this other stuff. It's about process, and it's in the beginning, even like the first year, first 2 years, it could be 3 years. It's process. And when you're developing your plan, it should be what criteria needs to be met for me to create to enter a stock, and what is my exit criteria for a target and a stop loss. This is something that should be predefined before you even enter a trade. Once you have risk out there and you are entered into a trade, humans by nature, we have a fight or flight in our biology from our ancestors and way back when, right? So as soon as you enter a trade, every human out there, we're struggling and we're fighting off this biological thought process of fight or flight, and we perceive money, risked money, as a threat to us. And so if you're trying to make a decision in the moment, it's going to be skewed. It's not going to be a clear decision. It's going to be altered by your emotion, if that makes sense. So in my opinion, having that clear plan before you enter any trade around where your entry is, where your stop, and where your target is a must. That's step one. Step two is sizing that trade. And we talked a little bit about sizing. Personally, the way I'm sizing trades is I use something called a risk unit, and it's determined by Kelly's formula. Kelly's formula is a way to decipher how much I should risk on every trade. It's essentially a percentage of your overall account. So for my trading, I'm risking 0.5% to 1% on every trade. And Ed, this is why I was asking you earlier about 100% on your overall account, because in order for you to make 100% on your overall account, you have to be risking a lot. Unless you have to be risking a lot to make 100% on your overall account. Unless you're able to do like 4, 5, 6, 7 R on a run. And the way I'm trading is very small. I'm very risk adverse. I'm looking for base hits. I'm not looking for home runs. It's something that, like I said, I'm only risking 0.5% to 1% on a trade. And so once I've defined my entry and my stop, I'm able to minus the two from each other. So if it's 50 cents from my entry point to my stop loss, and I'm risking $100 on every trade, say, then I would take $100, I divide it by 0.5, and that would tell me for this trade, I'm going to purchase 200 shares. And that means where I've entered, if I hit my stop loss, I know before I even hit my stop loss, if this trade goes against me, I'm going to lose $100. And then it also tells me if I hit my target that I've predefined, then I'm going to make $200, and that's if I'm using a 2-to-1 risk to reward. We'll talk a little bit more about risk to reward here shortly. Yeah. Right. It happens. Emotion. Yep. Yeah, it's something that every trader struggles with it at some point, and it's something that never goes away. To be honest with you, you just become more desensitized to it. Becomes similar feelings, and this is where self-discipline comes into, right? So um, uh, creating that self-discipline, there's many tactics to create self-discipline, but there's many items to talk about there as well. But before we get to that, kind of going back to risking it. So I shared with you kind of what I'm doing there, and what this means for my own personal trading. I'm not saying I'm doing it the right way or the wrong way, or my way is the best. Everybody has their own approach, and so I'm hoping that just by sharing the way I'm approaching it, it may resonate with some of you, and maybe you'll find some value in it. And so when I'm trading, I already said I'm very risk averse, and the way I'm sizing my position, whether I'm trading an IPO, whether I'm trading Tesla, whether I'm trading a penny stock, every single trade I'm taking, I'm starting out with one risk unit, and this is something that allows me to be consistent with my sizing. And in order to be consistent in the market, the only way to be consistent in the market is through your actions. Everybody talks about, oh, become a consistently profitable day trader, right? No one really tells you how do you become consistent. And it took me a long time until I got a light bulb that went off in my head that there is no consistency in the marketplace. The only thing that can be consistent, or the only way to create consistency, is through your actions. And what does that mean? It means we have to look at what do we have control of in the marketplace. We have control of our entry, we have control of our stop loss, we have control of our target, and we have control of the stocks we select. We have control of the position sizing, the number of shares we purchase. That's all we have control over. That's all that every trader has control over. So when you want to talk about being, oh, sorry, go ahead. Yeah. So the only way to create consistency in, yep. Yeah. And so, and this is my opinion again, right? So take it for what it's worth. But the only way to create consistency, or the only way I've been able to find consistency, is really kind of stepping back and looking at my actions and saying, how am I approaching the market? Am I approaching the market in a consistent manner? If I'm not approaching the market in a consistent manner, my results are going to be inconsistent. All right. What was that? You're all right. All right, so we spent about 30 minutes here, kind of talking a little bit of trading. So I'm going to shift gears here a little bit and talk a little bit more about the shift to automated trading. Give you guys a little bit of glimpse of what I'm doing there. I don't want to take too long here and waste anybody's time today. So I'll take a little bit of time to give you an idea of the automated trading and systems I've built. And then I'll give you a quick demo of the analytics I'm using and where that came from. And then we'll just open it up to Q&A and just talk until everybody has all their questions answered to the best of my ability. So again, I mentioned that I've really shifted to automated trading. This is something over the last 6-7 years, I've taught myself how to program in Python, and I've developed a completely automated trading system. So I looked at some solutions that were out of the box, and I couldn't find anything that was customizable enough for my needs. And so every bit of my system I developed. So I've developed all of my scanners. I've developed a execution system, and just high level for my own personal trading. What I'm doing now is I have a scanner essentially that looks for setups, and for every scanner, I have a way that I execute for the stocks that scanner picks up from. So the scanner is helping me segment the market. It's helping me find stocks that have similar characteristics to one another. And then I have, for each scanner, I have a particular way that I execute on the output of that scanner. And the scanners essentially tee up stocks into an execution system that I've built. So the scanners, something will alert on my scanners, boom, it automatically picks it up to my execution system. And then I also have another kind of module that streams level 2 data and the tape into my execution system. The execution system, once it has that stock loaded into it, it sits there and it just waits for those parameters to become true for it to execute. So again, you can do this with discretionary trading too, by saying, what are the conditions that need to be met in order for me to enter, exit, or take my target? I've done the same thing, it's just programmatically. And so the system I've built, it can look up to 100 stocks in a day. The stocks change based on the scanner, so it's not, for 90% of the strategies I've built, the stocks change every day. And the system basically can look at 100 stocks every day, up to 100 stocks. It can't look at anything more. And it can execute and make any decision on 100 stocks within 200 milliseconds. It'll make a buy or sell decision on any one of the 100. So it's very fast, and it's rule-based. I would say I think I have 6 strategies in it now. Right now I'm really working towards scaling it. 5 of the strategies are rule-based, and one of the strategies is using machine learning, where I've built a machine learning model and I've trained it to basically find my entries and exits for me. So that's essentially how I'm trading now. It's completely automated every single day. It loads all the stocks into it, starts up in the morning, shuts off at night, shuts off over the weekends. And there's quite a bit going on there. Now, in order for me to get to that point, when I was trying to develop my strategies, I needed a way to understand them. I needed a way to back test. I needed a way to forward test. I needed a way to quantify them. And so throughout my journey of building all of my systems to trade, I developed out some scripts that helped me quantify the output of a strategy. And throughout this whole process, originally the scripts, they literally started as a console in Python, and I was taking I was developing strategies in Thinkorswim at the time, and I was taking the output and I was crunching all of the data, and I wrote all the functions to give me the statistics on it. And I found so much value in this that I ended up hiring a front-end developer, a back-end developer, and they took what I wrote from my own personal trading and they built a web application around it. And but at the core functionality of the web application, it's the analytics scripts that I've used in my own trading, and now I'm using my platform for all of my analytics needs. And so, what Market Jungle is it's basically the outcome of me building my systems. It's the outcome of me building all the analytics for me to quantify my trading and to understand my own trading. So I'll give you guys a quick demo and we'll talk about it for a few minutes here, and then we'll shift over to QA and talk more trading. So again, why did I need a way to quantify? So everybody was also talking about being consistently profitable, and they're talking about understanding your edge. And earlier on in my career, I had no idea what edge was. Everybody talked about edge, but edge to me may mean something different to everybody else on this call, and each of us may have a different definition of edge. The way I look at the market is it's a probability it's a probability mechanism where not one trade is going to make a difference in a system. It's when you're dealing with the market, it's about creating framework and creating a system and then measuring that system. It's no different than any other business, right? If we look at Apple, Google, any large organization, every organization has some sort of framework around it for it to operate within, and they all have KPIs that help measure that performance and help guide them to create a better business. If we look at just the social landscape, we have the government here in the US, for instance. The government is a framework. It's how society, it's the framework that society lives within, and law enforcement is how we keep that framework and we measure that framework. Just another analogy. So trading, it's no different. The main difference is we're all conditioned in these different systems, in these different frameworks, and we've never had to actually build the frameworks ourselves. When you go to the market is completely random, and there is no framework, and it's up to each of us to develop that framework, develop the KPIs, and understand how does it perform. So this is kind of the main problem that Market Jungle solves. We help basically you define your edge. We help you understand what strategies are working for you, what strategies aren't working for you, how to optimize your strategies, how to test strategies. Many professional traders have systems like this, but they're pretty expensive. And talking with some of the other prop firms like T3 and others out there, they have systems that are $500 to $800 a month. But most retail traders don't have the ability or means to get into any of these systems because of the barriers to entry with cost. There's also challenges with backtesting. Many traders don't even take the time to backtest, or do they have the means to do a backtest. There's also many challenges that traders may not even be aware of, and that's market conditions changing, right? So we either have bull market, bear market, or sideways market. In each market condition, there are different strategies that work better in each condition. So these are just some of the problems, and with this tool that we've developed, it's basically the solution to these problems. So provides you personalized insights on your own trading. It allows you to track your psychology and strategies to stay more consistent. It allows you to create those KPIs around measuring how well do you adhere to your system. It allows you to backtest or forward test strategies and optimize them. Reduces your screen time because it'll tell you when the best time to trade is based on your own trading habits. Again, there's a lot of benefits here, and I don't want to put a sales spin on this. So I'm just going to keep rolling through here so I can give you a demo. And really, there's 3 easy steps. You import your trades. You can tag them with your strategies and market conditions, and then any other tags you wish, and you can analyze them. So Market Jungle, we're launching it in 3 phases. Right now, we have phase 1 complete, and this is where you can get the analytics. Phase 2 is something that we're going to start in June or July timeframe this year. Phase 2 is taking the automated trading system that I've developed, and we're going to be building a full UI over it, and we're going to build a drag and drop like snap builder, so people will be able to build their own automated strategies that are their strategies, and they'll be able to backtest them, forward test them, quantify them, and then choose when they want to go live with it on their own capital, on their own accounts. And so it'd be fully customizable. It'll link to your own account. and you'll be able to, yeah, go ahead. Sure, sure. Uh, mhm, mhm. So I'll show you here in a few minutes. I think it's actually right now. Let me pull it up. I'll give you a demo of it. And just one thing I'll preface this with, this is our MVP, meaning most viable product. This is something that is my passion project. It is just me full time on it. The developers I have are freelance developers. They're paid as needed on tasks that I don't have time to do. So a lot of the tasks I'm doing the programming myself. Other tasks I'm outsourcing when needed. So it's something that's a work in progress, and but I'm really excited to share it with you. We've made so much progress on it, and it's already providing quite a few traders a lot of value here. So um, the tool is more an analytics tool, and I'm not sure what your name is. It says Canadian boy, uh, but the tool is more of an analytics tool, so it's not yet at a state where we're doing any sort of correlation analysis. We've had thoughts around uh, bringing in some additional features there, and we have a quite a long list of features that we want to add. Uh, One of the things that we're doing here is, since we're so new, we are trying to get our first set of users leveraging the tool, and it's something that we're going to be working closely with the first set of users to collect their feedback and help us prioritize what features do you guys want in this tool. This tool so far is really just designed for me and my trading, and I want to make sure that as we continue to add features and functions to it, we are considering what other users want in the tool as well. So there's many different directions we can take this. It sounds like you're basically saying a way to quantify baskets of stocks and how they're correlated to one another, and how they move together or apart, which is something that would certainly be valuable. But as of right now, we don't have a feature that does that. So let's see. So what if you were to log into the tool? This won't have any data in it. You'd be able to go to import trades. We have a list of brokers that we're already integrated with. So for each one of these brokers, you can export your trades and basically drag and drop the file here. Most of the trades have a CSV file that you can export, and you would just drag and drop it here, and those trades would get uploaded into our system so that you could quantify your historical trades. Now, this list we are constantly adding to. We've been adding, I think in the last month and a half, we've added at least 4 of these brokers in here, and we're continuing to add additional brokers as new users are coming on board. We also have a generic import, which is just an Excel spreadsheet. So if the broker is not listed in here, you can just basically put your trades into the Excel spreadsheet, which is a generic form, and upload your trades that way. If the broker is not in here, we essentially can get the broker added in a couple of days and have it up and running for anybody as well. So once your trades are uploaded, under the trades view, they'll populate. And this is where we're grouping your orders together to understand what your trades are. In this view, you can go and you can look at your trade. So over here on the right-hand side, if I click this, it will give me the orders themselves, and it'll give you a place to add notes or add tags to your trades. And one of the things that we're doing this week, let me just pull open another one. We're making this whole view here is changing this week. We're actually bringing this up, and we're going to consolidate these 2 items here, and we're putting a big chart down here, and we're going to start adding all of the, we're going to overlay your executions onto the chart, and the chart's going to be a lot more intuitive. And we're also going to be able to allow for indicators to be on the charts as well, so you can see on the day that you took this trade, what did the indicators look like, where was your entry, where was your exit. It'll help you understand Was I early? Was I late? So on and so forth. Sure. Yeah. 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 No, you're good, Ed. Thank you for your comments here. And I'm going to show a couple use cases here and how I use it, and I think that'll make things a little bit clearer as well. So I'm just kind of going through a couple of the other items that are more flow here. So the other item is we do have a journal here. It's going to allow you to rate your emotion for the day. You can journal about your trades for the day. You can see the different trades for the day. We're working on creating some visualizations around your emotion compared to your P&L. And it's going to, when we get that released, it's basically going to give you an understanding, is your P&L curve correlated with your emotions? And if it is, that's not a good thing. That means you need to work on your emotions. If it isn't, that's a good thing because it means your emotions aren't tied to your P&L. So that's something we're exploring right now and looking to add into this as well. Right now, we just got the rating system, but the visualizations will come next. Now, let's talk a little bit more helpful items here. So over here on the right, we have filter. I'm going to just go look at the last 90 days. So many of you are probably familiar with a P&L curve like this on the right, where it's choppy, it's moving down, and maybe you're consistent, maybe you're not consistent, right? So the idea behind this tool is after uploading your trades, you can analyze, you can tag them with a strategy that you've used to execute, and you can forward test and paper trade with strategies and quantify them. When I'm looking at this, if this was, and this is just a demo account, but if I'm looking at this, the first thing I would say is we have a abnormally large loss on this day. Why do we have one day that we have over a $10,000 loss here, $12,400? Just looking at this, I should have some sort of a daily stop loss somewhere around these values or even up a little bit higher here. So I'm probably going to want to have a daily stop loss at maybe $5, $6, $7,000 somewhere in there in this example. That doesn't help us too much, but what really helps us is as we are putting our trades in here, let me see if I can go find some. We can tag those trades, and I showed you that by clicking this, you can add the tags. You can see this tag was traded with something called forward test and double bottom. And so in this example, this trade was a double bottom pattern that I executed on, and forward test is just another way of saying that this was paper traded. Just as an example, these tabs are completely customizable. They can be whatever you choose you want them to be. By putting tags in your trades, it allows you to segment your trades. So now if I'm over here and I can say, I want to filter all of my trading history by double bottom. So I can come in here and say, for all of the patterns that I've taken, let's look at double bottom strategy. And maybe this is a strategy that I'm forward testing. And that's the way I have it labeled here as an example. So if I was paper trading a double bottom strategy, I could now come in here and I could separate all of those historical trades that I took that were double bottoms and say, hey, this P&L curve doesn't really look that good. how do I want to improve this strategy? And in this example, we're talking about this is paper traded, it's uploaded. I'm using this tool to quantify. So this strategy isn't really good. It's losing money. I could come over to statistics here, and in the statistics view for this one strategy in this example, I could come in and I could see the performance of it, I could see the risk management around it, I can see a drawdown analysis, and then I have visualizations around days and times and all sorts of other goodies in here on how it's working. In this particular example, with a P&L curve looking that bad, it may be, hey, there is no edge in here, and maybe it's something I need to think about. Maybe this strategy should be a short strategy instead of a long strategy. If I took the same exact parameters and I decided to use short orders here instead, this P&L curve would be mirrored and it would be straight up. So it's a way to quantify. I'll give you another example here. So let's go look at opening drive. So I have another strategy I trade. It's called opening drive. And again, this is just an example. Boom. Well, hey, look at this strategy looks really good, right? So with this particular strategy, why if I quantified every strategy, or excuse me, every trade that I took that was an opening drive, if I tagged it as an opening drive in here, and I was able to see my P&L curve for all of my trades that I've taken that are opening drive, and then you just saw that other one of double bottom. Why would I want to spend more time, energy, and effort on my strategy that's a double bottom, that I'm trading double bottoms with, when I have a strategy right here where this P&L curve looks pretty good, right? So this is a way to understand each of your strategies and look at them separate from one another. It's segmenting your strategies. It's saying, how do each one of these strategies work by themselves? And then how do they all come together to make up my overall P&L curve? So in this particular example, I'd say, all right, this strategy, it's trending, it looks pretty good. I'm just going to focus on this strategy right now, and maybe there's a couple other strategies that you're trading that you also want to focus on. And I just realized my camera's here, and I'm looking over here because everybody else's screen is over here, so I apologize. Now, just another example. So the way I'm leveraging this tool is I also track market regime. So there's different ways to classify a market regime. You can use a 200 moving average, you can use different indicators, but the idea is to come up with a way to classify the market to bull, bear, or sideways, and then stick with it. If you have a way to classify the market as bull, bear, or sideways, you can also track how is a strategy doing in the different market conditions. So, excuse me, I personally add a tag for market bull, bear, sideways. So in this case, I have the strategy opening drive, and I could say, you know what, I want to see how well this strategy works in a sideways market. Let me go put both of those tags in, and now I'm filtering by both opening drive and a sideways market. Well, now if I look at my P&L curve, I'm like, this thing's really moving sideways in a sideways market. So is it profitable for me to continue to trade this strategy in a sideways market? Maybe not. Maybe I'm just racking up commission fees when the market's moving sideways. So I could also come in here and I could say, all right, well, what's it doing when the market's in a bull market? And I could say, well, hey, that looks awesome. So maybe my thought process here is I want to reduce my risk in a sideways market, and I want to go full size in a bull market, or maybe I don't want to trade in the sideways market. I want to trade only in a bull market. And the idea behind this is you're monitoring each one of your strategies individual over time. You can understand the statistics behind them, understand how to improve them, understand what market conditions they work good in. And if we want to take it a step further, so say you're using this to build a strategy and you've come up with your plan, you have the rules around entries, exits, stops, targets, all of that. You're executing all of your trades the same way every single time, and you pull them in. Well, say this is my strategy, and I want to figure out maybe it was sideways, or maybe it wasn't growing as much as it's showing here. And maybe I want to say I want to figure out how do I make it better. How do I want to optimize this strategy? So let's go look at the statistics. So right now, since I'm still filtered by my opening drive and market bull, these statistics here are all specific to my strategy. If I clear the filters, it's taking everything within the time frame. But since I have the filtered criteria on here, it is showing me specifically that strategy in a bull market, and these are the statistics for it. So it's showing it made $26,000, and just looking through these statistics here, and this is just dummy data in this example, but a few things that you would want to look for in your actual trading is your average winning trading should be at least twice as large as your average losing trade. And this will tell you that you're over the long haul, you're maintaining at least a 2-to-1 risk to reward. Same thing here with average hold time. So a way you could analyze this data is you've always heard the saying, let your winners run, cut your losses quickly, right? So we're quantifying the amount of time that you're holding a trade. And this means if you're running a 2-to-1 risk to reward, well, again, your average winning trades, they should be at least twice as long in duration as your average losing trades. That tells you specifically that, hey, I am on average holding my winning trades longer than my losing trades. If you see data like this, granted, this is showing a profitable strategy here, but it might just be profitable in this time. These statistics right here are showing me, I really should be focused on holding my winning trades longer. And this could be an indication that, yeah, it's profitable. It could be an indication that I am missing out on a lot of profit here because there's a lot more for these to run possibly. So in my own personal trading, I shoot for at least twice the average holding time. My average losing, I think, is just around 5 minutes. And my average winning time, personally, on majority of my strategies, is 22 minutes, just to kind of give you an idea. So that's one way to interpret this. And then risk management, this is going to tell you profit factor. This is your cumulative profits divided by your cumulative losses. And so when we talk about risk to reward, that's essentially what this is over all of your trades. And for any strategy, you want at least a 2 or higher here. If you have less than a 2 here, that's basically indicating that you can be more efficient and you're wasting your time on this strategy. We talked about stops, targets, and entries. And so a 2-to-1 risk to reward would be if I'm risking 50 cents, I'm going to set my target at $1. A 3-to-1 would be if I'm risking 50 cents, I'm going to set my target at $1.50 above the entry. And there is a lot of things happening here, but there's a relationship between your profit factor and your win rate. So the bigger, and by profit factor, I mean risk to reward. The bigger your risk to reward is, so if you're running a 1 to 3, 1 to 4, your win rate is going to fall. The tighter your risk to reward is, if you're running a 1-to-1 risk to reward, you could probably get a much higher, I shouldn't say probably, you will get a much higher win rate with a smaller risk to reward. So you also have to consider your psychology. If you are a person who wants to win more often than they lose, you should probably be using a smaller risk to reward to get a higher win rate because that's going to marry up with your personality traits much better. If you're okay with taking the loss, and then having a really big winner and it's covering all of those losses, then you tend to fall more into a higher risk to reward ratio, which is going to give you a lower win rate. So just something to think about there. Now, if we further dive into these statistics, we can also see the drawdown. So what this helps you with your psychology again, and how this helps is it's a way to say, if I were to lose $2,000 on an average drawdown, am I okay with that? Can my psychology support this? Or for a max drawdown, if I have a max drawdown of $4,600, can my psychology support this? And what I mean by this is, if I lose this much money, am I going to continue to follow my plan the way I have designed it, or is this much money going to rattle me enough so I don't follow my plan anymore? Again, just to help you understand it. Now, if I were to optimize this strategy more and I want to make it better, I can come look at the days and times that this strategy is working well. So I can say, all right, hey, I'm losing money on Mondays. So an easy thought process here is, why am I even trading on Monday? Why don't I just trade Tuesday through Friday? Something as easy as that could help you improve. One that I personally use in my trading is this one right here. This one is very important to me. This is the time of day that this strategy works. So I'm sure many of you realize that your market is open and it's designed in 3 sessions. You have your open session, you have your lunch session, and you have your power hour, your close session. Most of your volatility is at the open and at the close of the day. Different strategies work better during the middle of the day versus at the end of the day or at the beginning of the day, whether you're trading mean reversion strategies or momentum strategies. So what this is going to help you understand is at what time of day does my strategy work the best. In this particular example with this opening drive strategy, well, opening drive strategies typically work in the mornings because it's your opening drive. You have a lot of volume coming in. You have the overlap with the European session and the New York exchange, and it's something that in this example, I would probably not trade this strategy after 11 o'clock. So 12 words on, um, it's losing money. So I optimize all of my strategies by time of day, and I'm leveraging this chart right here to do that. And this is going to reduce your screen time. Why look at the screen and try and trade after 12 o'clock when your statistics are showing you that anything after 12, it's not going to, you make money here, yeah, but you're also losing money here. So why don't you just give yourself the rest of the day off, trade that one strategy up until 12, you're reducing your screen time and you're increasing your P&L. It makes sense to me. Again, we're doing performance by year, performance by duration. So this is if you're day trading versus swing trading, how well are you doing at both? And then we also have a bunch of statistics down here around price and volume. The other chart in here I use a lot is this one right here. This different price stocks have different characteristics about them. So that's why you have like micro, small cap, medium cap, large cap. And what this chart does is it says what price stocks is this strategy working best on. So one of my personal strategies works great on everything from $10 to $99, but everything over $100, it's losing money on. So I don't trade anything over $100 on one of my personal strategies. In this example, they are all working great. All right. Yeah. Mm-hmm. Yeah. So, I mean, over time, if you're uploading your trades every day or uploading your trades once a week, um, the time period in which you're filtered by, it's always set the last 30 days from default, or you can expand it out. As you add trades to it, so every single day, if you're adding that opening or the panic dip buy, I think you mentioned, if I added a trade today with that strategy and I filtered by it, my win rate and everything would update. So it's something where with the market always changing, what I found is that many strategies they go in and out of sync with the market, but this tool is to monitor that. So as what you'll notice is over time, every day or every week that you're uploading, you'll notice, hey, my win rate's starting to drop on this strategy. Hey, my profit factor is starting to drop at this time, and that's when you start to see it dropping, that's when it's your cue to say, all right, well, is the market changing, or do I need to re-optimize this strategy? So if it's dropping, one way to approach that is, all right, well, let me see what is working with this strategy, and let me tweak it a little bit to try and get it to go back in the other direction again. Or the other thing to think through is as the market's changing, one strategy might be falling out of sync with the market, and another strategy might be coming into sync with the market. So personally, what I'm doing is I'm looking at what strategy, if something's falling out of the market, I'm also monitoring the ones that may have not been in sync with the market. And I'm saying, okay, well, this one's now starting to come into sync with the market. It's starting to trend. So now I'm going to start to focus on this other strategy as well. Does that answer your question? Yeah, yeah. So yeah, and one of the other things that we're doing here, and I already have this built into my automated system, but we're one of the items that's in our backlog that we're looking at doing here. And again, I'll preface this with we're trying to grow our community here, and we're trying to collect feedback from the users and prioritize those tasks. But one of the things that we're thinking about is having like an optimize button up here where there are traders who might not know what should I look at on this screen or how do I make this strategy better. And so we're looking at including an optimize button, and when you click it, it will highlight, hey, let me draw your attention to your average hold times, or let me draw your attention to these different areas on the screen that kind of start helping you focus more on, I have this strategy, where do I need to focus to make it better? With my own personal trading, my system, I have an API for this tool, and my system hits each one of my strategies every morning. And every single day, my tool is coming here and it's saying, okay, what's changed? How do I need to adjust my strategies? What strategies should I be trading today? And how do I optimize them? So every single day, it's kind of self optimizing itself based on this. But from a discretionary trader's perspective, we're looking at putting a button on here to help you focus on different items. Now, we covered a lot of ground here, guys. So I'm going to take a step back and see if there's any questions. So in the initial phase one, no. This what you're seeing right now is phase one. This is our MVP. This is for you to get analytics on your own trades, to monitor your edge, to understand your edge. Most people don't even know what their edge is. So this is not going to make the trades for you. In phase two, that is what we are looking at doing. I'm just going to my website here so I can show you. So in phase two, um, actually, I might be able to just show you here. Give me one second. Phase two is going to be, we haven't even, well, I say we haven't started. We've built a low fidelity prototype of it, and development efforts are going to start in June or July this year. So that's kind of where we're at, and it's somewhat dependent on us being able to get this first tool out. We're trying to measure how much value can we create, and then if we can have a successful rollout here with this tool and start to build a community around it and actually drive value to users, then it could happen sooner here. And one thing I failed to mention is, let me just open this here. Originally, Market Jungle, I was thinking about doing like a stock alert service and trying to help people out that way. But I had found that it didn't help traders. I could tell you exactly how I'm trading, and your results are going to be different than mine. I could call out every single trade, and your results are going to be different than mine. And I pivoted from that because I didn't want to just say, hey, buy here, sell here, buy here, sell here. I felt like it wasn't actually teaching people to fish. And so, yes, this is more work, but you kind of have to put the work in to be successful at this game. And I didn't want to just say buy here, sell here. I wanted to actually provide true value to people. And so we pivoted around stock alerts to building out this system to try and create better value. And I'll show you here. I don't want to take up everybody's time here, but you asked about phase two. So this is the prototype for phase two here. So essentially, phase two will include automated trading. It's something like this page here, live positions, will show you all the positions that you're in, which ones are open. It'll give you the ability to manually close a trade if you choose to. You'll be able to come in and you'll be able to add an account. You'll be able to select your broker, get your API key, link everything. You'll be able to come in and configure all of your risk settings in here. And this is all mimicked off from my own automated trading system right now. So all of these rules are already built into my system, but it allows you to toggle the rules on and off, enter values here for like what's your max daily wins, stop, your max daily stop loss, max spread. So like you can say, hey, I don't want this to pick up anything more than a 10-cent spread, whatever the case may be here. So this is all your risk parameters. Then you can go ahead and once you get an account linked, you can create strategies in here. You can link multiple accounts, multiple strategies. You can map strategies to any account, any which way that you want. When you come into the strategy builder, we're going to have a bunch of how-to videos to try and get you off the ground and get you understanding how to use the tool. This, again, is a prototype, and I'm thinking we need to simplify this screen here a little bit. So this may change. This isn't set in stone right now. Based on some of the testing we've done with users, there's some areas that we want to improve this and make it better. But the idea here is you will be able to create scanners. So up here you can see scanner conditions, and then you can see execution conditions. This will be what are the conditions in my scanner, and then the executions will be once this stock is scanned, how do I want to execute and buy and sell orders on it. The other piece that we're going to put in here is a way to trade just one stock. If you wanted to design a strategy just for one stock, we're going to find a way to add that to the UI, and I'm not sure what that's going to look like yet. But the idea here is you'll be able to have all of these different if, then, else operators in here. You'll be able to drag and drop them to the screen. All of your different indicators will be available in here. Comparators, math and statistics. You can do date, time, fundamentals. Basically all of the different items that you need for creating algorithms. And then we're also looking at ability to put custom blocks in here where you could write your own programming in if needed. And you would essentially be able to drag and drop and connect them together and create a strategy. So this would configure your scanner, and then you would configure your execution parameters, and here you'd be able to click on any block, get the idea about what the block does, the inputs, the outputs, configure the different blocks. You'll be able to say, all right, this is when I'm going to buy to open, this is when I'm going to buy to sell. Again, I think this UI is going to change a little bit here, but just an example of what we're thinking. And then once we have scanners and execution conditions and all of this mapped out, you'd be able to validate your logic, and this just makes sure that it can be loaded into the system. And then you could run a back test. The back test is going to leverage the same statistics that are in the phase one that I showed you earlier that are live. This is going to leverage that, and it's going to test that strategy on historical data. And so you can come in here without even trading the strategy yet, and you can say, hey, look, this looks great, or I want to modify it. So you can kind of tweak and play with your strategy until you get it the way you want it. Once you get your strategy the way you want it, you can save it. And this is an example of two strategies coming in here. You can say, I want to link it to a particular account. So if you have two accounts, you can say, I want this strategy to my cash account. I want this strategy to my IRA account. I want this strategy to a different account, or all to one account. Forward test. Forward test will allow you to just take your strategy, and it's going to allow you to paper trade it. It's going to test it in real market conditions. And then you'll be able to do the statistics on the forward test. And then once you decide you want to risk capital, you can turn forward test off, and it'll be live on real capital. So that's phase two. We're going to hopefully be started with this in June, July timeframe is when we'll get started on the development work. Yeah, no problem. I think at this point we've spent a lot of time here today. Um, Two things here. One, I was hoping to get everybody's feedback just on what they've seen today, and if they think it would bring them value. I'm open to any feedback. Again, not trying to sell anything here. Just the more feedback I can get, the better I can improve these systems and make them more valuable for everybody. So the first question is just feedback from everybody, and then after that, if there's any questions that we want to go through, any trading topics we want to talk, anything about your own personal trading that you want to talk through, I got time here. My time's your time tonight, so we can go through any of that afterwards. So, with that first question, anybody have any feedback on what you've seen so far today? Yeah, yeah, okay, yeah, yeah. And again, just to reiterate, phase two, what I just showed you, that's a prototype. But that'll be July, and yeah, we've got a lot of feedback on that one. A lot of people can't wait for that. Yeah, 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 yeah. Something I'll add there too. Pay yourself first when the market's in your favor and you're making some money. I personally scale out of my trades, and that's so that I can make sure I'm locking in something for myself. So as part of my trade management plan, I take three quarters of my position off, either at 2R or 3R, depending on the strategy. And then I leave a quarter on, and I bring my stop loss up to break even. That way, I'm locking in all of my profits. And if that quarter runs, great. It's icing on the cake. If it comes back down and stops me out of my entry, no harm, no foul. The other thing I was going to mention to you as well, and this goes back. There's another comment made earlier about being patient, right? And so there's different order types available. And one of the things that helped me earlier on is OCO orders, open on or yeah, what is it? Open, close, open, something like that. Essentially, what it is, I can't think of the acronym. I'll have to look it up after. But essentially, what it is it's a bracket style of trading, and um, when you enter your trade, you can predefine your stop and your target at the same time, and you can if you're running a 2-to-1 risk to reward, you can configure the OCO order so that your stop loss is 1 hour away and your target is 2 hour away automatically without even having to do the math. And when you place your order, it'll automatically place your stop and your target for you. If either of them get hit, it will cancel the other order. So if you get stopped out, your target will get canceled. If you hit your target, your stop loss will get canceled. And that's an easy way to place an order and have a hands free approach where once it hits your target, you're out. Once it hits your stop, you're out. And you click to get in and you just sit there and watch it. And that helped me earlier on because both orders were in the system, they were placed, and I didn't have to do anything. I just had to sit there and watch. And sometimes it was really uncomfortable. I found that I was battling with myself to move the stops and targets, but over time it got easier. And again, the whole risk piece, if you're feeling uncomfortable, start smaller. Again, it's process. That's where success is made. It's in the process. Any other feedback? Mm-hmm. Yeah. Yeah, I mean, at the end of the day, risk and reward should be managed on every single trade. And when I'm discretionary trading, I try to, if I'm running like a 1 to 3 risk to reward and I'm discretionary trading, I want to make sure I can hit my 3R target before there's any sort of resistance, which is typically, can I get it before the last pivot point looking left? If I can't get 3R before the last pivot point looking left, then maybe it's not the right entry for me, or maybe it's not a 3R trade. 3R trades are something that I find more after consolidation periods, after some sort of momentum and basically after momentum and a consolidation period where there's a lot of trap traders. That's when you're going to get the bigger trades. But like you said, with a one-to-one, you're going to have more opportunities, and it's going to be a higher win rate as well because it's easier to hit one-to-one risk to reward than it is a 1 to 3. It's also faster. Yeah, yeah, yeah. And the only two ways to handle that is limit orders, or the only other way is if you're using market orders is to include the spread in your um, stop loss. So if it's a 10-cent spread and you're risking 10 cents, you're actually risking 20. Because if you use a market order, you're only going to get out on the bid. Yeah, yeah. So I got a 10-cent spread limit, and if I see my setup and the spread's over 10 cents, I don't take it. It doesn't follow my plan. That's just me. Again, everybody can treat it their own way, but that's just how I handle it. Mm-hmm. 15 or 20 cent what run? Yeah. Um, it, yeah. Again, it's all your preference on trading, and if that's your strategy, then again you have to monitor it, and you have to understand, is your win rate high enough where it's working for you. Personally, I don't trade that way. I want to make sure that I have much more upside than I have downside. Um, if you're if, and yeah, yeah, yeah. Thank you, Ed. Let's see. Any other comments, feedback, questions? Hey, Jonathan. Such as what? Leads. Um, so I'm an equities trader, and it does handle options for some brokers. I'm not familiar with what a lead is, though. I apologize. Could you Oh, okay. Yeah, so in longer term investments, yes. So it's going to be quantified in minutes. The tool's really geared towards day traders and swing traders, but for what it's doing is it's just looking at your opening orders, it's looking at your closing orders, and it's pairing those together to quantify a trade. It's looking at the first order on when you open, and it's tracking how the quantity that you have open, and then it's looking at that last trade that closes that quantity out, so your quantity is now zero. And it's looking at that difference, and it's calculating the time difference between them. So whether it's a day, a week, a month, a year, it's going to show it in minutes, but it's going to quantify it properly as long as that trade is open until the time it's closed. And all of the statistics and all of it, it's still going to quantify. It's just going to be a longer time frame. So, what? Yep, yep. Yeah, certainly. That's an awesome question. So, um, building a system helped me create consistency, and it forced me to have to sit down and think through specific rules for me to have to enter and exit. And so, discretionary trading, it turned me more into a systematic trader, I guess is what I'm saying. So now, in my previously with discretionary trading, I didn't take the time to sit down and really sit down and spend. I spend more time outside of the market hours than I do in the market hours. And it, when I was discretionary trading, I didn't do that. I was more worried about making money. I thought I had a process and I thought I had rules, but I didn't. It wasn't to the extent that I have them now. And so by developing my automated trading system, it literally forced me to have to write the rules down because I had to turn them into programming. And in order for you to program logic, you have to logically think about the problem. And so it has certainly changed everything. It's what allowed me to create consistency because it forced me to have to write those rules down. And once I saw it trading by itself, I was seeing that, hey, it's holding these longer. I started to see all of the issues that I had. um, and so over time, even in my discretionary trading now, I would consider myself a systematic trader because I trade the same setups. I trade the same way. I have, if I were to if I were to go trade tomorrow, I can show you here. Ed, is it okay if I show my Discord channel, Ed? I don't know if that's okay with you or not here. I was just going to show like how I'm trading. Okay. Okay. So this was kind of early on here. Can you see my screen? Do you see my Discord channel? All right. So like the way I'm trading is, uh, this was earlier on when I was trying to work through doing a signal alert service, and we've pivoted from that now, but I still have this stuff up. So this was from my automated trading system. This was a strategy I was using a couple years ago. It was literally a pre-market high strategy where I would. These are all stocks that are in play and they're still in play to this day. So I'm looking at these now for different setups because they have a lot of volatility. But earlier on in my career, this scanner, these setups were for. I was basically um, uh, taking the trade above the pre-market high. When it broke the pre-market high, I was setting my stop loss one ATR below it back then, and I was setting my target two ATR above it. Super simple. And so every single day I would come in here, I would look to see what I was trading. I would monitor each one of these, and I would take the trade over the pre-market high, and I would set it up the same exact way. Where I came in every morning, I looked at what stocks came out of my scanners or what I was looking at. I would go execute the same way. I would go place my orders ahead of time in the platform, so everything was already set up to rock and roll with OCO orders, and then I would just let it play out. To this day, really, I'm only trading this strategy right now, discretionary trading. So, with my automated trading, I'm doing a lot more than this, but for my discretionary trading, literally every single one of these, I'm executing the same exact way every single day. So, today, these were, I haven't even looked at these ones today, but these were the items that came up today and I actually missed these because I wasn't available this morning. But literally every single one of these, I'm trading the same exact way. And so, from a discretionary trading stance, you can do this the same way with your own scanners. It's very systematic. It's monotonous. Trading should be boring. It shouldn't be exciting. Excitement is an emotion, and if you're feeling excited about it while you're in a trade, you're not thinking clearly. And being systematic now, I literally would say, all right, here's my trade. I know exactly how I'm going to get into this, how I'm going to get out of it, how I'm going to size my stop. Same thing for this one, every single one of these. I'm approaching them the exact same way. And it's something that if this is what I'm focused on, right? So other things throughout the day, uh, I'm, it might look really good, but if I don't know the statistics on it, I'm not going to trade it. It's okay to let trades go. It's okay to not chase things. You don't need to be in the market all the time to make money. And a big misinterpretation of a lot of traders, everybody's programmed or wired um, to think that they need to be in the market to make money. Everybody works and trades time for money, and the market, you don't trade time for money. You sitting in a seat is not what makes you money. What makes you money is being very selective. It's it's waiting for those A plus setups. It's following your plan. It's you don't make money by having risk out there. It's like a shark tank where you have money at the bottom of the shark tank and you want to dip a toe in and jump in real quick and then jump out. It's not staying in and swimming with the sharks, if that makes sense. Does that kind of answer your question? Mhm. Yes. So um, essentially, what you're seeing is my scanners, and the way I trade is I use scanners to segment the market, and the scanner is going to give me stocks that that have similar characteristics. Most of my stuff that I'm day trading has high relative volume. It's something that is in play. There's a lot of eyes on it. There's a lot of volatility, and so I am segmenting out everything that has low relative volume, and I am looking for specific patterns. Excuse me, guys. So my scanners, I am going to create a scanner that finds me my setup. And how I do it is I go look at the charts and I say, all right, let me go find some patterns that are actually moving, for instance. And let me go look at the history of a couple charts. Let me go take screenshots. For a long time, every single trade I was taking, I was taking a screenshot and putting it in a journal just so I could see how they move. And so what I would do now is I would go back and I would look at old stock charts and I would say, when did this stock move? What was the market condition like? And how can I quantify the run up to the move? So if I were to trade this on a whole chart, where would I want to enter? Where would I want my stop? Where would I want to target? And then what indicators, what math, what ranges, how do I quantify the run up to the move? Not, I don't want to see it after the move. I want to know the run up to it. I find a way to quantify that, whether it's with um, indicators or, like I said, price action, mathematics, volume, whatever the case may be. And that is my scanner. Personally, I start with a broad scanner, and so I'll program the lead up to a setup. And so what's coming out of that scanner, it's saying, boom, here's my double bottom scanner. Boom, here's my cup and handle scanner. Boom, here's my inverse head and shoulder scanner, just for like simplistic um, patterns here. Uh, the other one I showed you, that's my opening drive. I trade a lot of opening drives uh, with my discretionary trading. And so I have a way of quantifying what do I want my opening drive to look like, or what do I want this pattern to look like, and what's outputting from that scanner is stocks that are similar characteristics with their volume, similar characteristics with their setup, and everything that's coming out of it looks similar because it's programmed in that way. So every single one of those, when it triggers and I open it up, the candlestick charts look very similar. And so you start to understand little nuances over time because you're looking at the same pattern over and over and over and over and over. So you start to pick up on many things because you're looking at the same thing all the time. And so that's kind of, I pair my scanners with my strategies, if that makes sense. Yeah, this morning. Yeah, 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 hmm yeah, yeah. The other thing I do is every morning that I have a routine, and I've actually built this. Again, I'm a systems guy, right? So this is a pre-market email that I got a list of people that get this email every day, and this is this gives basically the top stocks to watch at the open. What this is it's high R vol stocks over $10. That's what these ones are. And so this morning, BAC, DAL, F were the three that triggered this morning. And then for each one of them, this links you to, there's like 60 or 100 different news websites that I'm leveraging here. And it'll automatically bring you to the news lines. It shows you the news for those. These are the catalysts for those stocks with the high R vol. So this is the other thing I'm using to figure out what am I looking at for the day. It has all of the earnings for the day. So this morning I knew, hey, look, the banking sector had a lot of earnings today. This is something I looked at this morning. I think I posted it in your Discord this morning, Ed, where I said, hey, banking sector has a lot of earnings plays this morning. But there's earnings after close that comes here, and then IPOs every single day. The weekly IPO calendar is on this. So every single, I've consolidated everything into one email here so that every morning I'm not having to go look at all sorts of different sources. I just pull up in my own email. And then I also have event calendar. So is GDP changing, or is any sort of economic release that's coming out? I'm aware of that before the market opens, so I can try and understand is today a good day to trade or not. All right, let's. Any other questions here? I want to open it back up to you guys and make sure that we're answering any questions or trying to get you as much value as we can here. Any other questions, thoughts, concerns, topics? Thanks, Tyler. Looks like Jen. I don't know if you had any questions or thoughts or chat. Gotcha. That's good to know. I'll have to check that out. Jen, I saw you unmute. I didn't know if you were going to say something there as well. Yeah, no problem. Um, Chuck, and then Jalux. I don't know if I'm saying your name right. Any questions or thoughts that you guys have? Yeah, I can hear you. Yeah, so I'm pretty involved in the trading community. I was recently featured on Chat with Traders in their community, which is a pretty pretty neat podcast if no one has heard of it. They're interviewing like billion-dollar hedge fund managers and just some very successful traders. I think the most recent one was Jack Kellogg, who turned 30 grand into 11 million in the last 5 years. So they're kind of pioneering the podcasts when it comes to trading. Um, I learned a lot through them, learned a lot through the community, and I'm actually continuing to connect with other traders. I've met some other traders who are doing automated trading, but they don't. It's mostly programmers who don't know how to actually trade. Where I was kind of the other way around. I didn't know how to program, and I knew how to trade. So I've noticed a lot of differences there. Uh, I know when you start talking like Wall Street and how sophisticated they get, I mean, they're going as far as taking like satellite images of crop fields and using machine learning algorithms to understand the output and the yield that the crop fields will have ahead of time before even placing trades. And so, like, they're way beyond what I'm doing here. But I think in the next, I shouldn't say this year, right now, I have built machine learning models, and that's everything up until like the last 3 months has been all rule based. But now I'm really getting into building machine learning models. And so one of the strategies that's not trading right now, but I'm testing, I've actually built a system that will go find edge for me. So it takes about 7 hours to run on one symbol, and in 7 hours, it'll self teach itself how to trade that stock the best possible way in the last 180 days. And then it will load itself into the execution system and it will trade that strategy moving forward. So right now, I've developed all those systems and I'm testing it right now. So I'll be hopefully competing with them here this year with some of the machine learning stuff. Uh, no, it's really not possible in my mind. I mean, most people are trading really big size. They're using like dark pools and other liquidity items. Uh, the, when you're trading bigger size too, with algorithms, you can hide your trades a little bit easier through like iceberg orders and different order types. Uh, what you're referring to, I think, is more spoofing, which is illegal, which is when they're showing size on level two and taking it away and trying to manipulate. That's not something that's legal to do. Uh, and so I think there are times you can still see some spoofing, but overall, I don't think algorithms are a bad thing in the market. I think they're adding liquidity, and most of the trading that's being done by like Wall Street is more HFT, like high frequency trading, where they're really capitalizing on the bid ask spread. And really, at the end of the day, that's just going to provide more liquidity for everybody, in my opinion. Yeah, yeah. So I mean, I'm in Ed's room here. I got my own room called Market Jungle, and then the platform. I'll put the link to the platform in the chat here once we get off the call if you guys want to check it out. But I mean, drop me a message on Market Madness or in my own Discord or wherever. Private message me. I'm very busy, so I do try and get back to everybody. But certainly open to talking trading and seeing how I can help. Yeah, no problem. Chuck, yeah, Chuck, yeah, yeah, 30,000. Well, he started with 10 and he borrowed 20 from his parents. Yep. Well, awesome guys. I think Chuck was the only other person we hadn't heard from here. I don't know if you had any questions, Chuck, or not. All right. Well, I hope everybody got some sort of value from today's conversation. Hopefully, um, something may have resonated with you, and maybe you can just be a little bit better tomorrow when you go into the market. That means today will be a success. So let me know again if any questions come up, and I'll throw some info in the chat here right after we get off the call if anybody wants to reach out. Thank you, everybody, for your time today. Yeah, no worries. Well, I'm going to go spend the rest of the night with my family. Hope everybody has a great night. Take care. Yeah, yeah, no problem, Matt. Let me know if you want to do something in the future, and we can maybe, no problem. I think today we talked so many topics. If there's something specific in the future that you want to talk through that's more focused, hopefully tonight kind of gave everybody a broad understanding of my background and what I'm doing. And then if there's some value or if there's questions around particular focus items, maybe we can do some very short or much shorter calls and focus in on a particular topic if that's helpful. So let me know. Let me know what you need for support, and appreciate the opportunity to talk with everybody. Thank you. Hey, take care, guys. Take care, Ed. Have a great night, sir.